Hello there. Welcome to my channel. In this video, we want to look at managing the finances of a business operation. So we abbreviate it as a MFBO, and we are going to look at our module two. So in our module two, we have got key financial terms. So within the context of this video, we are going to look at income as a financial term. So we are going to look at income as a financial term. As we proceed with information that we have, we see that we are given a table of contents whereby we have got various topics that we have in module 2 from topic 1 to topic 5. But within the context of this video, we are only going to look at topic 1, which is on business income. Within our business income, we are going to look at what is a business income and try to understand what's the meaning of a business income. And secondly, we are going to look at what are the different types of business income, very important. And then lastly, we look at how should a business income be managed to ensure business success. So within how we should manage the business income. That's where we're going to bring in the issues of internal controls. So basically, this is what we have in terms of the context of this video. So moving on, you see that we are now having the content that we have according to our module 2, which is on income. So we are seeing that we have got 5 topics, and this is that are being measured that we have just looked at. So we can just proceed, whereby we are now having our topic 1, which is on our business income. So basically, we are looking at topic 1 in this video. So basically, we know that income and revenue. These are two different terms that are used interchangeably in place of the other, but we know that their meanings are different in a way. So you see that the meaning that we have for income, basically income, we can try to define it as companies' total earnings after all expenses and earnings that are not counted as revenue are deducted. So basically, we are saying if we say total revenue and then we subtract all expenses, or also we subtract interest, cost of sales of goods sold, and then we also subtract taxes. The net figure that we get becomes our revenue. So basically, we are saying if you try to bring it down to a formula, you see that income is equal to subtract expenses. So this is the basic formula that we can give in terms of the calculation of our income. So from this formula, we can easily differentiate between revenue and income. So you see that now revenue, those are earnings before we deduct expenses and costs. And then income becomes the net that we have after deducting expenses and costs from our revenue. So basically, this makes it clear. But within the context of this video, you're going to see that we are going to regard income as a revenue. That is within the context on that part. So moving on, you see that we are given a description that we have of business income beneath there, which reads a business income is what a business is all about. No sales, no business. Here we look at the different types of revenue and the controls in place to ensure revenue is recorded and payment are secured. So obviously, to ensure that we collect the revenue as required, we have to put in place some controls that we have assurance that all our revenue is going to be collected. So basically, this is what we have. So after studying this topic, so the following key questions will be answered as we explore this topic. We have got what is business income? What are the different types of business income? How should business income be managed to ensure business success? So basically, this is what we have said. The definition that we have for business income, we are given it there. We are seeing that we have got a layman's definition of revenue. This is now the definition of revenue that we are given according to layman, which reads a revenue or revenue. Revenues or revenue in business is the gross income and it receives from its normal business activities. So very important that we try to specify the earnings that are being received as we describe revenue, that they are coming from normal business activities. So we are saying we try to identify what are the main products that are being sold by the business. So when they sell those products, the earnings that are going to be received become a revenue. So we try to differentiate, for example, a business that is selling grocery items, and for example, a supermarket selling grocery items. Then they sell a motor van that they use to transport those groceries. Obviously, when they buy them from the wholesalers. So that motor van, when they sell it, remember the income that they are going to get, then the earnings that they're going to get from selling that motor van is not going to be part of our revenue, because you'd see that it's something that they are not getting from their normal business activities. Remember, their normal business activity is to sell grocery items or grocery products. So basically, that's what we have in terms of this explanation, that is saying revenues or revenue in business is the gross income an entity receives from its normal business activities before any expenses have been deducted. So as we are trying to explain, so revenue may be received as cash or cash equivalent, and is typically generated from the sale of goods or the rendering of services for a particular period of time. That is Peter Bucksville. So in brackets, so what this last statement that we have is trying to illustrate is that it can be cash, revenue can be paid from the point of view of cash, or it can be a cash equivalent. So cash equivalent is that we are not only going to maybe sell our products and receive cash. So you'd see that the sale might be on credit basis. So we are saying whenever we sell on credit basis, obviously we are going to create some trade receivables or some debtors. Those debtors or trade receivables becomes cash equivalent, because we can easily convert those debtors into cash as we receive the amount that those debtors are owing. So basically, this is the explanation that we have for that one. Then we've got a business dictionary, their definition that we have, which reads an income generated from the sale of goods or services, or any other use of capital or assets associated with the main operations before any costs or expenses are deducted. So you see that both definitions are explaining what is being earned from main operations. So we can take note of that. So we proceed and see that as we go forward, it reads revenue is usually shown as the top item in an income statement, which is the profit and loss, from which all charges, costs, and expenses are subtracted to arrive at net income, also called sales or turnover. So sales or turnover also can be used in place of revenue. They mean the same thing. So we are saying revenue is a very important aspect as we calculate the net profit or the net income in the statement of comprehensive income, or the income statement as a financial statement. So basically, that's what we have in terms of the explanations that we have there under what is business income. So you see that we are also having revenue coming in, where we have also business income. So as we proceed, you see that we are now given uh, in this module, we'll consider business income as revenue. So very important, as we try to highlight at the beginning of this video, that within the context of this module, we are going to regard revenue as income. So this is what the statement is trying to illustrate. As the statement reads, in this module, we consider business income as a revenue. So in most business operations, the value of the revenue is itemized on an invoice. So you are going to have a full invoice will accompany a car service or repair. So this is an example that we are given. And then a second point, we are given a cash sale. It's say Pick and Pay will print a sales slip identical to an invoice. All the SARS requirements for VAT will be on the slip. So basically, this is the explanation that we have. Then we now have the different types of revenue that we can have. Remember, types of revenue is also one of the main objectives of this topic one. which reads, we have got different types of revenue that we have there. And the first point is saying a cash sale or an internet transfer can be also a form of revenue. When we have a cash sale, we have sold on cash basis. And then secondly, it can be revenue in the form of a credit card sale, and then also have a sale on credit where the customer has, in most cases, 30 calendar days to settle. So basically, this is a credit term that is considered to be a norm in most businesses, that they give a 30-day credit term whereby you are expected to pay the amount that you are owing within 30 days. So last point, we've got a sale in payment terms. For example, you're given a 6 equal monthly payments. This could include an interest charge. So this is another way of collecting revenue, which is on payment terms. So this is what we have in terms of our revenue. So we also have, as we move forward, we are given what are the different types of business income. So here now we are given types of business income, whereby it reads business income can be derived from the following. So we are given a sale of products. That is in brackets. For example, we are given a business sales tires. So this is a type of revenue that you can have. We also have a sale of services, royalties, rent from property, and then we also give a rent for properties, and then we've got interest and dividends, and lastly we've got capital gains as another type of business income. So this is what we have on types of business income. So on the last part that we're going to look at, according to this video, we are going to look at product and service sales, where we derive them, the business forms that we can derive our product and sell and service sales. So you see that we can have a manufacturing business, we can also have a retail business or a service business. So what is important for you is to understand what actually do we mean when it's a manufacturing business. Obviously, a manufacturing business converts inputs into our outputs, whereby obviously the inputs might come in the form of raw materials, where they are now processed to become final products by being manufactured. So we'd see that it's further subdivided into small, medium, and large. And then if you move forward, you'd see that we also have a retail, which is obviously going to describe our retail outlet, which we can also subdivide into stores and online. And we're given examples. And then we have got a service, a business also, which covers a large range. And then we are given examples whereby we have got doctors, obviously they offer health services. We've got travel agencies, obviously they offer hospitality services and travel arrangements. And also on the second point, we have got car sales and repairs, garden services, cleaning services. They are all services. So this is what we have, guys, according to this video. So as for the next video, we are going to proceed with our topic one, whereby we look at the last part of our topic one, whereby it's on how should a business income be managed to ensure a business success. So let's stay tuned for more videos to come. As we go forward looking at this module. So thank you for listening, and please let's not forget to subscribe and share. We are still coming with more coverage, so let's stay tuned.